So good afternoon, everybody. My name is Stephanie Lucas. I'm the founder and CEO of the Annuity Consultants. I want to thank you all for joining us today. I really appreciate your time and opportunity to get to know you a little bit through our broadcast. As far as what we're doing today is we've got a disability income webinar that is being hosted for CE. And I have uploaded a handout that you will need to submit to us in order to get your CE from Rodney. And it's on the left-hand or the right-hand side where it says handouts. It says handouts 1 of 5. So you should be able to go there and download that, fill it out, and send it back to me. And I will also be sending out an email so that you can reference my email address there, but the email is slucas@theannuityconsultants.com. We'll definitely make sure that you have that available to get it over to us as soon as possible. Actually, Rodney, do we need it by end of day? Is that?
Yes, I needed it dated today, and I need it by end of day just because of virtual requirements with different states.
Okay, cool. Good to know. So a little bit of housekeeping. We will be answering questions throughout the broadcast. If we don't get any questions, it'll run probably 40 minutes, but we do have an hour blocked out. So as many questions as you guys have would be appreciated. You can put those questions in the chat box to the right-hand side. You can also mark them private if you want them to be private. If we don't get to all of the questions, we'll make sure that we have them answered in the email that we're going to send out to you with a copy of the broadcast. So I'm going to go ahead and introduce Rodney to you. We're so thrilled to introduce our speaker today, Rodney Mogan. Rodney is a 20-plus-year veteran in the financial industry, specializing in advanced life insurance strategies, long-term care, disability insurance, and small business solutions. Rodney was #1 in DI policies in the country at Ameriprise in 2002, 2003, 2004, and top 5 from 2000 to 2006, and as an independent top DI producer counsel for the past 10 years, averaging 100 policies and $30,000 in annual premium for DI policies. For LTC, he averaged 100 policies a year with $65,000 annual premium, has spoken across the country about LTC factors and its importance, and in many state legislation and organizations. And he educates advisors and small businesses on how to solve their financial puzzles. So welcome, Rodney. We're so happy to have you.
Stephanie, thank you so much. I appreciate it. And all of you that are joining, thank you very much. Appreciate you joining. So the CE today is certified for 3 states, California, Texas, and Louisiana. We are working on getting more states added, but not every state allows virtual, and you have to kind of work through different state requirements as well. So just a couple rules before we get started. I don't like a whole lot of rules, but because it's virtual, I got to make sure I cover a couple of these. Number 1 is I will have a poll question at some point during this next 45 minutes to an hour. I do need you to answer that. If you do not answer it, you do not get credit. So this is our way of making sure that you actually attended the class and didn't just walk away. Not that you would, but that's what the states are requiring from me. Secondly, is Stephanie mentioned, if you have questions, put it in the chat box. I try to break every 10 minutes or so that I can answer questions. So please ask the questions, and then we'll go from there. And then the last one is, please do not disconnect if you can help it. Do not interrupt your screen or whatever. Don't let it go out. We can actually track that. In fact, I'm actually looking at the dashboard, and it actually tells me exactly how many people are engaged. So don't switch other screens or anything like that, otherwise you will not get credit. So, and again, those are just the rules, but I'm going to try to make this very informative, very fast-paced, but at the same time, give you a lot of value. So let me let me tell you a little bit about myself. I am a disability insurance, or what I call income protection expert, partially because of the fact that I am permanently partially disabled. You might see crutches in the background. I am on crutches probably 90% of my life, whether it's through different surgeries or because I have to use a crutch cane or whatever it is. I've got some major leg issues. I am permanently partially disabled. Obviously I can still work. I can still do different things, but I have chronic pain that keeps me from working. And that's really why I like the term income protection, because disability has a connotation to it. Disability has this connotation that you are in a wheelchair, you can't move, can't do anything. And that is why a lot of clients don't have it. That's why clients don't want to talk about it. But that's why I like the term income protection. Income protection is a way to really talk to the clients about making sure that if they were sick or injured and were either limited or couldn't work at all, how would they pay for their bills? How would they do different things? So I am going to move forward here. Here's all the compliance information. All right, so we're going to really talk about the value to your clients, the structure of a disability policy, and then also the pricing. So income protection really helps protect one of your most valuable assets. As you know, that is your ability to earn an income. Most people, unless they have so much money in the bank and they've got a lot of passive income coming in, this is really the most important feature for them, and that's their ability to earn an income. In fact, I was just on a call before this, and the advisor was talking about this great incomes, or this great solution that they had to build money into cash value and all these different things. And I asked one question. I said, okay, great. What happens if they can't work for 8 months because of an injury or a sickness? Well, the whole plan would blow up. Okay, so why aren't you covering that? And that's the thing, is almost every advisor out there or agent, we don't sell enough disability. We don't talk to our clients enough about it. Our clients don't understand it enough. If you look at compared to disability policies compared to life insurance policies in 2019, disability policies were 2%, compared to life insurance policies of the total policy sold. So we don't do enough of it, and we should actually talk more about it. So people, as you know, will generally insure their cars, their homes, large purchases. And then a lot of them, and I know this is always a challenge, right? Sometimes get them to actually purchase life insurance, but they're more likely to purchase life insurance than they are disability insurance. A lot of people think they have enough of it through work, but we'll talk about that where they really don't. So when we're looking at different things, if you've got a 35-year-old that's currently making $80,000, their potential earnings are $2.4 million. You can see 55-year-old making $240,000, again, potential earnings to age 65 is $2.4 million. What you're actually protecting is not their current income, but you're protecting their ability to earn future income and actually fund all the plans, all the goals that you've been working with. And, of course, this chart does not include salary increases and, new jobs and all those other different things. But, that's just basically if they made the same amount of money for the next 30 years, that's what they would make. That's their potential to earn. So let's talk about protecting one of their most valuable assets. And, really in my mind, I started in this business 22 years ago. The number one thing I did, like Stephanie mentioned, I was always number one or in the top 5 in disability sales, because I was partially disabled coming out of college. So I actually had a story to tell. It was something that was important, but I really made it a core component of the financial plan, of the planning, of the conversation. It was the first thing other than cash reserves that I talked about with the clients. Not to overwhelm them about everything else. I always wanted to make sure those first 2 areas were covered and that they understood what the different things were. And then I started moving down everything else on my checklist. What I have found is that most advisors and agents do not make this a key part of their conversation. And really, the main reason why I have found is that when you're dealing with high earners and you're dealing with older people, then you might have a premium of $600. You might have a premium of $1,000. And a lot of advisors start to self-talk themselves out of it. They're okay with selling a $2,000 a month life insurance, cash value life insurance plan, but because they perceive that there's value with that cash value. However, when it comes to income protection, selling an $800 or $500, $1,000 a month DI plan, and not all of them are that high. Some of them, I actually have done 6 today already with clients, and I think the highest was 110, still providing some decent benefit, 110 a month, I should say. But there are some things that sometimes where the amounts are higher. This is where they also might be getting a $20,000 benefit. So if you look at things that way and instead of going, oh, I don't know if I would pay for that, or I don't know if I would afford that, or and stop rationalizing it from our side. We need to look at it from the client side. What if they couldn't have that money coming in? Would the $20,000 a month be enough to maintain their bills, maintain most of their lifestyle, and still help them save for retirement? Probably the answer is yes, or that 10,000, whatever it is. So that's really what we need to look at when it comes to income protection, is being able to really protect as much of the income as possible, but more than likely, it's protecting the future amount of income that they're going to be able to earn, so that they are not far behind if something were to occur, and most importantly, so they don't pull all their assets out. So, I have a brand that I call Solve Your Puzzles, and so I really like this slide because it's a bunch of puzzle pieces. And I think one of the biggest puzzle pieces many people miss is they miss the DI piece, like I talked about. They'll have health insurance, they'll have life insurance, long-term care. Believe it or not, more long-term care policies are sold than disability insurance, especially now that you have life insurance with riders and you have hybrid policies and things like that. And then retirement income. If I were to ask on this call, and this is not your poll question, but if I were to ask on this call, who is, what would you rather talk about, disability income or retirement income? I guarantee you, probably 98% of the people on this call would rather talk about retirement income than disability income. And our clients are the same way. That's the more sexy look. Long-term care, they know they need it because most of our clients are probably dealing with their parents. Life insurance, we all know we need that. And especially when we can use it with cash value to supplement retirement, things like that, there's a lot of different things you can do. And of course, health insurance, that's one of the biggest debates going on right now. So we all really need health insurance and we all want it. But the one puzzle piece that holds them all together is the ability to pay for all of them, and the ability to actually save for retirement, and the ability to do lifestyle and do other different things, and that is disability insurance. So it is a real need. It is something that, people know that they experience and they know that they need it. But because we call it disability, it is something that people actually forget about. Because they don't think a disability will happen to them. You think about in our world today, our society today, we try not to tell anyone that they have a disability. We try to tell people that, okay, you may have a limitation, you may have a challenge or something like that, but you're not disabled. We do everything we can to take that word out of it. And so that's why I like the word of income protection. And really talking to them about if something were to happen, if they were sick or injured, how would you deal with it? And that is really the key point that we want to get across here. So, here are some of your different stats. The one that has really stuck with me since I started 22 years ago, and it has not changed. And that is 1 in 4 of today's 20-year-olds will become disabled for at least a year before reaching age 67. And that is according to Social Security. And then this number has changed a lot. When I started back in 1999, it was only about 37% of Americans were living paycheck to paycheck. Now we've got 63% of Americans are living paycheck to paycheck. That does include sometimes people that you don't think are, but people, spend more money on houses, they spend more money on cars, things like that. So if they were to actually lose that income or a portion of that income, they might be in trouble, and that's where you come in. And then this number is actually, as of 2017, I can tell you from the 2019 number, it is now 76%. I'm sorry, 86% for 2019. It was 76% in 2018. 86% of all private sector workforce has no long-term disability insurance. That's either not having anything through group or having an individual. In fact, what we do know is that 1% of the eligible private sector workforce, 1% has both an individual and a group policy. We know that 2.5% have an individual policy. The rest are covered with a group policy. And as I said, that's not a whole lot of people out there. So there's a lot of opportunity for both group and also individual. And I know Crystal can definitely help you with that, but we'll keep going. So, you know, when we look about disability insurance, a lot of people think it's health insurance. And, you know, especially if you've ever watched an Aflac commercial, the duck, you know, and I really do love Aflac. I think Aflac is a great product because it gets the conversation going. But a lot of people look at that as a supplemental health policy, even though it is a disability policy. Health insurance covers medical bills. If you look at like an Aflac commercial per se, they talk about, oh, this gives me money that my health insurance doesn't cover. But people kind of put that all under the health insurance because they're talking about paying, you know, a doctor bill or paying physical therapy. So everyone always equates that to health insurance. But what income protection or disability income insurance really is, it is providing for what I call your MUG, your mortgage, your utilities, and your groceries, along with everything else in there. So you can see food, clothing, housing, transportation, retirement strategy, college education. There's riders on some policies that you can cover your student loan debt if something were to happen. You can actually continue to save into retirement with certain retirement protections. There's a lot of different things you can do with income protection. And so it's just a matter of what the client's willing to pay for, what the client's willing to do, and, you know, what they can afford. So what you do by talking about income protection is, in my mind, it's twofold. Number one, most important, is you are providing an education to your client, and you're really showing them different ways that they can be secure. Remember, 1 in 4 are going to be disabled for at least a year or more. And so that means you're more than likely going to have at least 1, 2, 4, 8 clients that are going to actually become disabled for a longer period of time. And, my joke is my wife and I have at least 6 other people covered because my wife is permanently disabled due to chronic migraines and a stroke she had, and then I am partially disabled. So we've got 6 other people covered, but now you got to find everybody else. So those are some of the things that you really want to do. The other reason why it provides value is because most clients don't talk about it, and because most advisors and agents don't talk about it. If you do talk about it, if you do have that conversation with your clients about it, you become a valuable resource to them, something that, because no one else has ever talked to them about it. And so the more you can have that conversation with them, the better.
So before we go on, I have a question.
Yep, I was just about to break.
Yes,
Go ahead.
When you're talking about covering a portion, how do you determine what portion you're covering?
Okay, great question. So some of that is already covered by law, or already taken care of by law, and some of it you have to do some math on. So the first piece is, if you've got someone that is working and they've got a group policy at work, then usually that's 50 or 60% of their base income, or something of their income, and each group policy is a little different.
Okay.
And so with that, you have that 60% in there. when you're right, so right there you've got about 60% covered. It's not fully covered, and I'll talk about that in a second. But the other amount, you can't cover the full 100% because the government won't let you. The government wants to have you have some incentive to go back to work. But on an individual policy, you have to take into account the group policy. You have to take into account automatically any Social Security. Basically, we all have access to Social Security, so that's taken into account. So roughly, we can replace generally between a group policy. Usually, you can replace about 70 to 75% of someone's income. 80% is the max you can do. Yet, I don't think I have ever seen a policy that's replacing 80% of someone's income. Now, some of that is also dependent on what their occupation class, which we'll talk about here in a little bit. And then also, again, remember I kept using the word salary. A lot of people don't make money just on salary. A lot of people that we're going to be working with have commissions, they have bonuses, they have distributions, they have other different things that are in there. Those are all things that not on the group policy, but generally on an individual policy, we can add in so that we can cover more of their income based on that. Does that make sense?
Yeah, definitely. And before we move on, I do want to mention, I know we had a few people join us after you got started. So I want to remind everybody that they do need to stay on the entire time to get the CE. And there is a handout available that you can download, which we need back by the end of the day to get your CE. So keep that in mind. And also ask questions then. So.
Yes, please ask questions. So let's talk about, I've already kind of talked about what disability insurance is not. It's not health insurance. It's not going to cover, it's not going to reimburse doctor's bills and things like that. It's going to provide income. And it's also not something just for someone because of that they're stuck in a wheelchair. And in fact, I've got two friends that are permanently paralyzed. And if I ever used the D word around them, they would roll their wheelchairs over my feet and they would hit me and hit me and hit me because they don't see themselves as disabled. And so that's why I really don't like that word. What it comes down to is how are they limited to what they can do? And, can they still work? Can they not work? So there are a lot of people who we normally would think of as being disabled actually are able, and they can, they do a lot of work. They just might not be able to do as much as maybe they did before. So a lot of common causes, is, ending up in a wheelchair due to an accident makes up 3% of all disability claims. Okay, 97% of them come from musculoskeletal issues, back issues where they can still walk, but just back issues that create some debilitation. But a lot of them are now coming from stress, anxiety, addiction, cancer, heart attack, stroke, different things like that. So, in fact, those numbers have changed drastically over the last few years. And disability does look at morbidity, not mortality. So not how long you're going to live. It's what is your chance of not being able to be your typical self at work. And, that's what more morbidity is. And then DI policy components, I like to say that there's 5 components. I like to say that there's 5 components that I really look at. Hold on.
While you get to that, when you were talking about the common causes of disability, I'm going to plug our heart-centered planning series right now, because what we talk about in that series is all about really taking care of yourself and being the best you that you can be in order to operate in the world at a high capacity. And so we talk about meditation and eating right and really taking time for yourself. And so a lot of what we're talking about in that series can assist people in not, being a victim, I guess, of these common causes, really. A lot of these can be the right type of lifestyle. So.
And then, really what we're then looking.
No, go ahead.
Sorry, I don't know why it's going on.
I don't know why it's going on.
Yeah, we're getting a lag on the audio, so.
All right, how's that now?
Okay, that sounds good.
All right, perfect. So one of the things that we look at for the DI policy components, I call it the five things I look at. Number one is occupation class. So they generally go from A to 5A or 6A depending on the company, but generally a 6A is the same as 5A. But really, the higher the number, the less risky the occupation. Okay, so a construction worker is either going to be an A or a decline, versus the CEO who never leaves their office is probably going to be a 5A. I might argue that the construction worker might be healthier and better in control of their health than the CEO, but just because there's more chances that that construction worker might walk off a beam or get hit or do different things, that's where they're looking at the risk piece. Second one is age, gender, and health. Income protection is actually one of those things that women are more expensive than men. I get asked all the time, why is that? Mainly because of the fact that women tend to listen to their bodies more than men. Women tend to claim way more than men do. Men tend to utilize their life insurance a lot more than they tend to utilize their disability. That trend is changing, but not changing a whole lot. Then you've got monthly benefit, waiting period, and benefit period. Long-term disability, we're generally looking at a 90-day waiting period or longer. Generally, you don't do a shorter one because it can be a lot more expensive, but I see some of them in there. Monthly benefit is dependent on their income, what their existing policies are, any unearned income that they actually have, and then their occupation class. And so all those put together come up with the monthly benefit period. Most policies now go up to age 70, but you can set it a lot of different ways. The longer you set it, obviously the more expensive it's going to be. Riders are extremely important. Some of them have help the definition of the policy. Some of them, added more favorable definitions for the client. Some of them add some different benefits, things like that. Depending on the types of riders that you put on there, those are some things you want to look at. And then the last one is price. Now, everything I talked about affect pricing, but the last one is price, because that is a component to me of an income protection plan. And a lot of people don't necessarily want to pay a whole lot for something, and especially when they've seen it on their paycheck for a group policy, and now they're being asked to pay $250, $300 a month. They're like, well, why? I paid $10 a paycheck at work. I'm like, yeah, because that doesn't actually cover you like you think it does. And those are some of the different things that we'll talk about. Underwriting and pricing. Underwriting is different than life insurance. Underwriters are really looking at what's the likelihood of you actually becoming disabled or becoming limited at what you can do. So, a great example is for some people, if they've got mild rheumatoid arthritis, I can still get them an income protection policy. It might have an exclusion on it for rheumatoid arthritis, but I can do it. However, depending on their occupation, I may not be able to do it at all. Like, for example, I had a client that was a lawyer, and they had rheumatoid arthritis, and on their duties they listed on the computer researching, typing, da-da-da. That was an immediate decline. Versus I had gotten one for a doctor who, was more of a researcher and things like that. So it just really depends on what their occupation, their duties are, and that's where Crystal and Stephanie can help you by really doing a lot of pre-underwriting with the clients and figuring out from there. Underwriting can affect pricing. Generally with life insurance, this is kind of my joke. It's real easy. It's really easy to claim on life insurance. You're either dead or you're not. With disability, it's a little bit more nebulous. Your doctor may say that, hey, you need to back off a little bit, but really you're still able to work completely and you're fine. So there's a lot of gray areas going back and forth, and that's where the underwriters really have to look at things. And so that does affect pricing at times from that. You might see disability policies that have exclusions on them. You might see where they have exclusions and what's called a substandard rating. And believe me, those substandard ratings can really, really be drastic. What I always tell my agents that I work with is make sure that you get a really good understanding of the client's medical health ahead of time, do a lot of field underwriting, and then you write a good cover letter to the underwriter. And that's where Crystal and Stephanie can help you with that as well. So, we talked about health insurance, it's workers' comp, life insurance. Those are all the things that are not disability. But what is disability income insurance? And like I said, it's not for the handicapped. You have to really think about what disability means to you. To me, that's why I like to use the term income protection. It really means, are you unable to perform your job due to a sickness or injury? I had a good friend and an agent of mine that got diagnosed with colon cancer 2 years ago. Basically, I ran his practice for a year. Even though he was working in it, I pretty much ran his practice. And, he would actually he'd have chemo 1 week, and then the few days after chemo, he couldn't do anything. Then the following week, he was getting a little bit better. And then the following week, he was able to do little few things. And then at the end of that week, he had chemo again. And the whole cycle started over and just kept doing that every 2 weeks. So basically, he was able to work maybe 2 days every 2 weeks and had to cram everything into work. Otherwise, he just didn't feel like doing it. And that's what you have to really look at is your clients may think they might be able to do it, but when it really comes to it, they probably can't. So this is a way for them to, actually be able to get better quicker. And, unfortunately, he never actually bought a disability policy. So I had to run his practice, but he is now in remission. He's clear 2 years out. He's good so far. But those are the things that, if we can take off some of their stresses, this is one of the ways we can do that from a financial side. All right. So it's like, and Stephanie already asked this question, but it's, disability insurance is designed to replace a percentage of your income. It's not 100%. They want to have, an incentive to return to work. We've talked about the most common causes, as you can see here, musculoskeletal 29%, nervous system related disorders is 7%. This was as of 2013. This has actually changed drastically. Since 2018, musculoskeletal is now down to 21, but nervous system related disorders is up to 21. So those are your two major areas of claims. Cardiovascular and circulatory disorders are actually up about 20. Cancer is still around that 15. And then, like I said, pure paralysis, things like that is still around 2 to 3%. So there's a lot of different leading issues there. So those are some of the things that you want to take a look at. So I'm just going to go through this slide real quick. Oops. All right. So let's talk about. Yeah, I know. So I went too fast. So we're going to be talking about these next few questions on when it comes to a disability policy. But how do I qualify? What if I return to work? Well, how I receive benefits? How much do I qualify for? How long? And then how much does a DI insurance policy cost? So qualifying, really, it comes down to the definition of disability. And if you remember, I talked about within a group policy, group policies and individual policies are all about the definitions. Group policies generally do not have very favorable definitions to us, meaning the clients. Individual policies have a lot more favorable definitions to the client. They're just more expensive. And the reason being is because group policies are generally not meant to really cover you. And you're probably wondering, what? A group policy generally has a lot of different provisions in it to make it very inexpensive. It's a very easy benefit for employers to give so that they make their employees feel like they're being taken care of. But it's really not as detailed as you think it is. There are some things in there, and this would be for a whole different call, but there are some things in there called coordination, taxation, limitation of benefits, a lot of other different things on the group side that can really affect the definition. One of the most crazy definitions I've seen on a group side is that you get own occupation for 90 days after the waiting period of 180 days. And then after that, it's a total disability definition. So it was a very crazy way of doing it, but basically what that meant, that policy was never going to pay. So the whole thing is you want to have own occupation in there. You want to have partial definitions in there. You want to have some different things. What happens to your benefits if you return to work? Again, this goes back to the definitions in the policies. Group policies generally will stop. Individual policies will generally have some type of partial disability or residual definition in there, but here you do really have to look at what is the definition of those particular riders, because some of them can be your best friend and some of them can really exclude you actually getting it. So when will you receive benefits? Generally, if you've got a 90-day waiting period, you will actually generally receive your first check not on day 91, but really at the end of that month. So, basically on day 119. So you really need to make sure your clients do have 3 to 4 months worth of expenses in there, and then they have money coming in after that. A lot of times you have people that do have good, solid short-term policies, so you may not have to worry about that. But basically think of it, whatever the waiting period is, think of generally about 1 month, 15 days to 1 month after the waiting period is when they receive their first check. Okay. I will break for a question here in a second. So how much will I qualify for? I kind of already addressed this, but it really depends on, your income, what benefits you have through work, any other policies you might have, plus do you have any passive income coming in? Meaning if you've got rentals, if you've got other different things like that, that might actually limit what you can get. So let me break for any questions real quick.
It doesn't look like we had any questions come in, and we don't have any.
Well, while we're breaking, I am going to launch the poll. So I'm going to give you all a few minutes to answer. The poll question is, when was the last time you sold a DI policy? Last 6 weeks, last 6 months, in the last year, more than a year, or never.
So again, this does need to be answered in order to qualify for your CE credit today.
Correct, which is why I'm going to give plenty of time to get that done.
Yeah, it looks like we're getting some people voting here. So thank you for taking the time to do that, guys. And also, while we're waiting, I can let everybody know about Crystal. So Crystal Clark is our VP of National Accounts for DI and LTC. She was going to be on the webinar with us today, so you could see her face, but we had some technical difficulties on her end. So unfortunately, you're not going to get to see her on this webinar. You will definitely get to see her on future webinars. And she'll be reaching out to everybody that has joined today to talk to you about your businesses, about DI and LTC specifically, and see if there's any opportunity for us to assist you in those areas. So, definitely look out for an email and phone call from her in the next week or so.
All right. Thank you, Stephanie. So it looks like everyone has voted, except for maybe you, Stephanie, if you haven't, because that 85% voted is everyone that's attending except for the 3 organizers. But basically, as I look at that, and I am going to close the poll.
Cool. Thanks for that.
So as we look at that, 36% have never sold an income protection. Of the people on the call, that's actually good. And the reason why I say that is I do a lot of these classes, and generally that number is in the 70% range. So the fact that some of you have sold them has been great. But 36% of you have not sold a DI policy in more than a year. I would have to say that you probably have an opportunity to in your book to sell that, and that might give you some time, an opportunity to talk with Crystal, and she can help you go through your book and actually maybe help you hit your fourth quarter goals that you might have. And then 27% have done in the last 6 months. So, I think that is a little indicative of COVID. However, what I will tell you is I have been extremely busy with disability policies the last 6 months. And it is because of COVID. People are seeing what a sickness or injury might do to their income. So that might be something that you may want to take a look at. All right, so how long will you receive benefits? It's going to depend on your benefit period. The most common benefit period is to age 65, but I have seen some that are 2 years long. I've seen some that are 10 years long. So it just really depends on what the client wants, what you're trying to cover, all those different things. And I will apologize if you see me moving around. I had major surgery on the 16th on my leg, so I got the crutches in the back, and so my leg does not like to just sit, even and elevated. So, how much does a DI policy cost? Basically, an insurance policy for DI is really a la carte. You can make it extremely expensive. You can make it actually really cheap. And again, it really comes down to what definitions do you want in there? How do you want to stress it? How do you want to look at it? And, really figure out some different things like that. Okay. The longer the waiting period, the lower the premium. The longer the benefit period, the higher the premium. The riders you put in, more premium. All those different things are different factors that you need to take a look at. All right. Occupation is a key piece of that. Components of an occupation class is the nature of the business, your exact duties. Remember I mentioned the CEO. CEOs are all different. And what I mean by that is you might have a CEO that is the CEO of a restaurant group, is never in the restaurant, and they might be a 5A. You might have a CEO of another restaurant group, but not only are the CEO, they are the executive chef. They do all the tastings and all the innovations and all those other different things. So they're actually a much worse occupation class. They're generally a 3A. Some companies have what's called a business owner upgrade. If you're the owner of the business, so if you really have to get into what type of business they're in, what type of duties they exactly have, all those different things. You have to look at their usual working conditions. In fact, there's a standard question on every single application. I enjoy asking this question, and it's, what percentage of your weekly duties do you spend crouching, squatting, bending, lifting? And people that you never ever would think would be doing any of that, oh yeah, about 25%, oh, about 10%. And you start asking them why, what are you doing? I actually had an HR manager one time. She somehow was responsible for changing all the water bottles on the water machine. She had to do a lot of other different things. She had to do all the filing. So she was actually crouching or squatting down and trying to put stuff in file cabinets. So you have to really look at what their actual duties are. For business owners, sometimes you have to look at the number of employees. Great example is you have someone that maybe they are a lawn architect, gardener, their landscape design, whatever it is. They might be the business owner, okay, but they may have 10 employees, or 20 employees. They're never out there actually doing anything with the lawns. They're just out there talking with the clients, maybe walking the lawn, take measurements, but that doesn't really affect them as much. Or they might be the one that's actually pushing the mower or moving the bulldozer, things like that. That's going to be a drastic difference in their occupation class. So you really need to look at what are they doing, and what is their insulation from having to do some of the work in their industry. You may have to look at part-time employment. You might have to look at, like nurses and some doctors and physician assistants. They don't necessarily work a normal 40-hour work week. They might have different shift occupations, things like that. So you have to look at a lot of those different things in there. So those are a lot of the components to an occupational class. So, we've talked about gender, we've talked about age, amount of coverage, issue limits. Each company has what they call an INP limit, issue and participation limit. This is going to be dependent on occupation class, on, case history, things like that. So waiting period, benefit period, riders, and then tobacco status. And then also the state. I know we've got some Californians on here. Most policies that I work with in California generally will have a 1-year waiting period because of the cash sickness plan that the state has. Other states have other different requirements or other different things we have to look at. So there's a lot of factors that go into this. So underwriting, oops, too fast. Okay, so underwriting, again, different health conditions are going to have different concerns. So with let's just say diabetes. With diabetes, that's going to be rated on the life side. However, on a disability side, it may or may not be rated. It just depends on how well controlled they are, how long they've had it, the type they have, things like that. In fact, if they are type 1, Crystal can probably answer this better than me, but I have yet to meet a company yet on the standard market that will actually issue a policy for type 1 diabetics, just because there's too many things that can go wrong. But type 2 diabetes, it's a little bit different. Or let's say arthritis. Arthritis, on a life insurance side, they might get select preferred, but on disability, they might have a substandard rating to it. So there's a lot of different things you have to look at. There are discounts. There's a lot of multi-life discounts, a lot of different things like that you can put in there. And there's also level and graded premium. A lot of times when you're younger, you can do a graded premium and then really, have the premium increase for a few years and then get into a premium you can, feel comfortable with. I think that is, I generally go with the level, mainly because of the fact that graded premium, yeah, it's a great way to get people started. But what I have found is every time I've done a graded premium, I generally lose the policy within 3 or 4 years because they're getting tired of the policy increases. They don't want an increase, even though you explained it to them at the beginning. They just want to pay it consistently all the way through. So, it just depends on where what you're looking at. So what else drives it? There's some definitions in there: guarantee renewable, non-cancelable. Ideally, you want a policy that's guarantee renewable, non-cancelable altogether. Some of them you have to put riders on. Some of them you have to do things in there. Some of them are just baked right into the policy. So it just really depends on what you're doing, and you have to look at those different definitions. Disability insurance, when you call it disability insurance, I don't think it's real valuable to the client, but if you call it income protection, if you really help them protect what they're doing, I think it becomes one of their most valuable assets and the most valuable policy to have because it protects the most valuable asset. You have to look at the policy structure. There are, like I said, those are 5 components of a DI policy that affect pricing, that affect different things, and then also you look at some different cost factors. So with that, I am going to stop and make sure I'm on time here. Yep, okay, good. Any questions?
Does anybody have any questions at this point? Doesn't look like we have anything in the chat. So now I guess the only thing is with the handout that we need back by the end of the day. Rodney, do you need to have that by the end of the day? Or if I have them by the end of the day with the date on it, is that okay? What are the restrictions?
That's okay. That's okay if you get them by the end of the day, as long as I have them tomorrow. Because I do have to file it by tomorrow. I'll close the business.
Okay, great. And I'm going to actually put my email address here so everybody has it in the chat to send it back to.
And then what I would say is if you have any questions on disability, reach out to Crystal. Crystal knows exactly all the ins and outs, everything I talked about. She is fantastic. And she's even taught me a few things. So, reach out to her, and she can definitely help you with your clients.
Thanks for your time today, Rodney. You've covered a lot. I don't know why I haven't been able to join you guys via video, but I finally just gave up and sat here and enjoyed your presentation. So thank you again for that. I appreciate your time and all of your education for everyone.
My pleasure.
Yes, thank you. Crystal, is there anything that you want to tell the audience before I wrap up?
No, like I said, I think Rodney covered, a lot of good things today. And if anybody's got questions or, wants to review some opportunities, obviously feel free to reach out to me. I'll, make sure that Stephanie, of course, sends you guys my way if you only have her contact information. I was going to add mine in here, but I'm pretty sure I won't be able to do that either. So, anyways, I look forward to working with everybody. And again, thanks, Rodney, for your time and your education.
Yes, thank you. All right, Rodney, do you have any other words of wisdom before I wrap it up here?
Yeah, just real quick, when it comes to income protection insurance, I think like I said, a lot of advisors get a little nervous about talking about it for a lot of different reasons. You don't have to feel like you have to do the conversation. You can get experts. You can get Crystal in there to talk to your clients. If Crystal can't do it, she can reach out to me. I'd be more than happy to help. Those are some of the different things that can be done. What I always tell people is my job is to help either train you, partner with you, or do it for you. And I know Crystal believes in the same thing. So
yeah, absolutely.
That you have the resources here to make sure that you don't have to be the sole expert. In fact, your clients like not the sole expert. They actually like it when you bring in other people to cover different areas that maybe you're not the strongest in, because now they feel like you actually really are helping them out financially.
Yeah, absolutely. Yeah, they have a lot of resources through us, so certainly reach out with anything that you might have questions on. And again, I will be emailing everybody a copy of this broadcast, and I will make sure that you have my contact information and Crystal's information. So again, thank you so much, Rodney, for joining us and presenting today. And thank you, everybody, for being here. We really appreciate your time. We know you have a lot of other webinars and Zoom calls that you could be on, so we really do appreciate you taking the time here, and we hope you found it valuable. So, we are hosting regular industry topics, webinars like this, as well as our Heart-Centered Planning series. So I want to let you know that each month we are hosting a topic from that series, and the next topic that we're going to be doing is going to be on living your vision. And my team, actually my marketing director, Allison, will be interviewing me for that topic. And if you've been on any of those webinars, you'd know I usually interview an expert in whatever topic we're presenting on. So I will be the expert on living your vision. So I'm excited to share that with you guys, and for you to get to know a little bit more about me and how I came about in this industry, and founding this company and really doing what it is that I have passion for. So I'm excited to share that with you on November 17th, on the 17th at 1 Central. In the meantime, if you don't already follow us on Instagram, Facebook, Twitter, and LinkedIn at The Annuity Consultant. So without further ado, thank you so much for attending, and I appreciate you guys. Have a great day, Rodney.
You too, Stephanie. Thank you.